Hey everybody, and welcome back to another Trades and Gains daily recap. My name's Max Pitts, and I'll be your host. Today, we had records being broken, predictions being made, and some major moves on the retail side of the market that did occur. To kick things off, the S&P 500 just notched its 30th record close of the year. That's a whopping 0.8% gain on the day, and the NASDAQ composite followed right up behind it with a 1% jump itself. One of the big reasons for this rally occurring is Wall Street's top experts are revising their year-ahead targets for the S&P 500, and they're getting more optimistic by the minute. Evercore ISI is predicting a year-end price target of 6,000, while Goldman Sachs is going for 5,600. The benchmark index just topped the 5,400 level for the first time last week and closed Monday at 5,473. With last week's inflation reports and Federal Reserve meetings out of the way, things are going to be very quiet on the economic front for this week. On Wednesday, we're going to get a glimpse into the health of the U.S. consumer with the retail sales report, which is going to be like getting a sneak peek at the birthday present. Speaking of presents, it looks like the Federal Reserve is starting to come around to a rate cut, with the Reserve Bank of Philadelphia President Patrick Harker hinting at a possible rate cut this year, saying, if we start to see several months of data moving in the right direction, I could see taking action. Minneapolis Fed President Neil Kashkari also suggested that a December rate cut might be the Fed's only move this year. However, things aren't always bright and sunny on the market. On the retail side, we have a couple woes that we currently have to get through. First and foremost, Red Lobster will officially be filing for bankruptcy, ending an era for the beloved brand. But the story of its decline is much more complex than just blaming COVID-19 or corporate greed. A combination of factors including changing consumer taste, burdensome lease agreements, and a series of poor business decisions have driven the company into financial despair over the past decade. The company's struggles began in early 2000 with the sales slumping and failed attempt to upscale its menus. Then, the sale of the company to the private equity firm Golden Gate Capital in 2014 only exacerbated the issues, with new owners using a sale-leaseback strategy to raise capital. This left the company in a position where they were not able to make any errors and too many fixed real estate costs. The fate of the company now lies in the hands of Fortress Investment Group, a Wall Street firm. Fortress is examining the company's prospects, drilling down on how each restaurant performs and identifying regions and demographics that would best support a comeback. The firm wants to cut Red Lobster loose from its burdensome lease agreements and is working to identify a path forward for the struggling chain. Trade and gains recap without talking about GameStop. Unfortunately, the meeting today did not go as planned. The annual shareholder meeting on Monday was highly anticipated, but CEO Ryan Cohen's brief remarks left investors disappointed. The stock fell as much as 15%. However, Cohen emphasized the company's focus on achieving profitability, citing a smaller network of stores and cost reductions. However, he provided few details on the company's strategy going forward, leading to investor uncertainty. The meeting was postponed last week due to technical issues, and Cohen's lack of transparency on the company's plans only added to the frustration. GameStop has been capitalizing on recent rallies, raising over $3 billion in proceeds from stock offerings over the past month. But investors are seeking more clarity on the company's direction. The resurgence of retail trader Keith Gill, also known as Roaring Kitty, has contributed to the volatility in GameStop stock. Gill, who sparked the meme frenzy in 2021, recently posted on social media, causing the stock to rally 180% over 2 days. However, his subsequent YouTube live streaming GameStop's early release of quarterly results led to a 40% decline in the stock. So that's all we have in the market today, folks. Thank you for sticking along. Thank you for sticking by. And as always, stay tuned for tomorrow's episode. We may have some new characters coming in the future. And talk to y'all tomorrow.